Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Morning Call. I'm Lata and with me Anuj and Sonia. And this is the day after President Trump stomped out of the Iran nuclear deal. As our set of experts pointed out, it doesn't seem unanimous by any standards. There could be fractions within the developed world as well. It's not necessary for even the EU to go along with President Trump, and much less for China and Russia to impose sanctions on Iran like they did before the nuclear deal. Nevertheless, crude is at its near-term highs, and India is usually one of the more impacted countries when crude prices rise. Yesterday, the rally was shouldered practically entirely by the banking stocks, by the Nifty Bank. Banks and bonds are usually the worst hit when inflation fears are fueled by crude. And this one, let us remember, is not a demand-led rise in crude prices. It's a supply-led rise in crude prices, which is a little negative. If it's demand-led, there is growth around the world, and so the world is able to take on the higher price. When it is supply-led, it's a little worse. But let's see how it plays. Let's hope the fractions within the, the US allies will perhaps restrict the impact of this decision.
Hi, good morning, Lata. Hi, good morning, Anuj. It's a bigger issue here, right? I mean, what happened yesterday, I guess in some ways it also shows the fragility of the global non-proliferation efforts. I mean, he's going to be meeting the North Korean leader later this week as well. There is an expectation that all efforts to denuclearize are going to be, be kicked down the road. So I guess all of this maybe could lead to, more geopolitical risks, maybe more a bigger rise in crude. You never know.
No, geopolitical risk is a possibility because nothing stops Iran now from attacking other countries, because that big incentive they had to stay as a well-behaved member goes away. Yeah, geopolitical tensions could rise, but I think immediately the issue will be how badly it's going to impact. How entirely it is going to be followed by other countries.
Oh, absolutely. But for our own markets, I guess we have other issues on our mind, because the market yesterday, although it consolidated, financials did very well. Anuj, morning. You've been saying this for a while, that it is this pocket that could perhaps contribute to the upside, and the bulls will maybe continue to have this stronghold. Does this buy on dips theory still hold? Because yesterday we saw big buying from domestic institutions, big delivery-based buying in names like ICICI Bank. How do you approach it now?
Yeah, morning, Sonia. So this is not fresh news, right? At 3 p.m. we mentioned that ICICI Bank should see 1,000 crores of delivery buying, and which was there. The market rally yesterday was extremely narrow. Day before was good because it was broad-based. I'll just give you some internals. Bank Nifty was up 238 points yesterday. How much was contribution from ICICI Bank? 277 points, more than the rally. Nifty was up 2 points. How much was ICICI Bank's contribution? 32 points. 1,000 crores of delivery buying in ICICI Bank, and most of that domestic buying that you saw was basically about this one stock. To put things in simple terms, I think today is a day of correction. My sense is that the market is now due for a 50 to 100 point correction, and the Bank Nifty is now due for 200 point correction. May not happen because the market is so strong. So, but as a trader, you have to look at the screen and say, okay, is the risk reward in my favor now? The risk reward is not in favor of you to take a fresh buy call now, either on the Nifty or on the Bank Nifty. But what could change things today is that IT index has corrected, and that's now gone into the zone of between 50 and 20-day moving average. It's down 4% this month, while the Bank Nifty is up about 2%. So there's a 6% underperformance which you have. So I think today is going to be big buying in IT because currency will have an impact as well, and perhaps some selling in banks. Let's see how they balance themselves out. So Nifty will, of course, have an impact on that.
But how do you reckon this move on crude will impact the market? Because so far, I mean, the market has not been hampered much, but now 76 plus.
And on that, going into trade yesterday, a lot of people took long positions. If you see the intraday chart of Indigo, Jet Airways, basically betting on this deal and, crude falling below 75. I think that trade will reverse, of course, for starter, purely that trading call. And of course, higher crude. In general, ingredients are in place now for the Bank Nifty to have some correction. The liquidity is so strong that it may not happen. That's the point I want to make. But logic would say that today the Bank Nifty should correct about 200 points. IT should rally today. Perhaps the IT index should be the best performing index. And then you see, in between you find an equilibrium on the Nifty where we go. But for me, that the trade today is very simple. You want to avoid the financials and you want to go on the IT side.
Okay, well, let's do one thing. Let's tell you what our other wise experts have to say as we head into trade this morning. Timothy Moore of Goldman Sachs says that since the start of Q4 FY18 results, CY18 MSCI India consensus EPS has been cut by 1%, led by a cut in financials driven by Axis Bank's weak results, while energy industrials have seen upgrades. He says the MSCI India is now trading at 17.4 times the forward PE, a 35% PE premium versus the MSCI Asia ex Japan, and 3.2 times price to book. He says to stay overweight with a Nifty target of 11,800 by March 2019.
Wow, sounds good. Okay, let's get you some money market views. Pramit Bhavat of Veracity says the rupee has been finding support at 67.20. He says despite positive cues from domestic equity market, the rupee has been depreciating on the back of positive dollar and crude outlook. He expects the spot USD now to trade in a range of 66.50 to 67.20. Okay. I would think it would stay north of 67.
Okay, let's also give you a view on the bond yields, right? Dhaval Dalal of Edelweiss says bond yields have declined by around 20 basis points after the RBI announced a 10,000 crore bond purchase on the 17th of May. He says market participants expect the RBI to continue on this path and inject liquidity between 75,000 crores to 1 trillion this fiscal in light of the FPI outflows, increase in currency withdrawals and support economic growth. He expects a 10-year benchmark bond yield to trade between 7.5 to 7.60% in the very near term.
Okay, over to Mangalam then for the world view.
Well, enough cannot be said about the big development overnight, Trump pulling out of the deal with Iran. So they said they will be instituting the highest level of economic sanctions, and any nation that helps Iran in its quest for nuclear weapons could also be strongly sanctioned by the United States. So we have to keep an eye out on that development, because what this means is that the US, now that they've pulled out of the deal, is likely to reimpose sanctions on Iran 180 days from now. However, there are a lot of opposition to this as well. So the likes of Russia, Britain, France and Germany are opposed to this deal. We'll keep an eye out on that. If at all this does go through, the important part is Iran's oil exports could actually drop by 1 million barrels per day. So fear of short supply has taken the crude prices higher. Brent is above 75, closer to 76. NYMEX too comfortably above that $70 per barrel. However, yesterday our markets were supported by financials. The similar fate took place in Dow Jones. It fell 150 points post the announcement of the deal. However, financials supported that index and it ended absolutely flat. The European indices too flat to red ahead of this big announcement. And the Russian index actually, after rising for a bit, saw a bit of correction, down about 1%. The Asian markets haven't taken well to the cues coming in from the world. Most of them are at the low point of today's trading session. Hang Seng too at one point was in the green, has now turned into the red. The SGX Nifty as a result is indicating a start of 30 points in the negative.
Okay, well, thanks a lot for that, Mangalam. That, of course, is the top story that we are tracking this morning. President Donald Trump has decided to pull the US out of the Iran nuclear deal. The landmark 2015 nuclear agreement lifted sanctions on Iran, and in return, Iran had accepted to limit its nuclear program. Exiting the deal fulfills one of Trump's campaign promises, remember, and the administration will restore all sanctions on Iran suspended under the deal. The restorations of the sanctions have not happened so far, but there is expectation that an announcement could come soon. Listen in.
I am announcing today that the United States will withdraw from the Iran nuclear deal. We will be instituting the highest level of economic sanction. Any nation that helps Iran in its quest for nuclear weapons could also be strongly sanctioned by the United States. America will not be held hostage to nuclear blackmail.
Okay, but this looks like US is blackmailing the other countries who don't fall in line. What happens now to the oil prices? We have absolutely the best expert on the subject, Edward Morse, Global Head of Commodities at Citi Research, joining us on the phone line from the United States. Good evening to you, Mr. Morse, and thank you very much for taking our call. What happens?
Compliment you gave me, I appreciate it.
Okay, well, just want to know how much more you can see a rise in crude prices. We have this long-awaited factor that shale oil will come in at some price and provide a ceiling, but will that happen now?
Well, we don't really know how much oil will be taken off the market or when that will happen. We're still awaiting more details on the regulations, on the waiver itself, or the waiver that's not been given. There has to be a waiver because the U.S. government has to negotiate with off-takers of Iranian crude and try to see whatever, and they haven't defined it yet, whatever a significant amount of oil is to be taken off the market. So there's been no diplomacy to date. We don't know how much it is. Is it going to be a low order of magnitude, like 200,000 barrels a day, which, 100 million barrel a day market is insignificant, or will it be as much as 1 million barrels a day? We don't know the answer to that yet. And anything in between is at stake. So, yes, I do think it's going to take a tight market, an already tight market, and make it tighter at least through the summer.
Okay, so it's hard to reckon how much the Iranian oil exports could fall. Mr. Morse, good morning, and thank you for speaking with us. We were just discussing a while back as to how, with this decision, as well as with the expected nuclear decision after the Korean talks come to an end, the bedrock of global nuclear order perhaps could be at risk. And what's your own view? What kind of ramifications do you think all of this could have on global commodities, including crude, going ahead?
It doesn't have much of an impact on commodities other than crude at the moment. We don't know what the negotiating ultimate position of the U.S. government may be, but to be sure, there is a very tight market in oil, and the tight market has come from OPEC, led by Saudi Arabia, and Russia taking oil off the market. And we know from statements that the U.S. government has made, that they have had conversations with producers, presumably those are Saudi Arabia, Kuwait, and the UAE, on bringing oil back into the market. There's been very limited information coming out of any of those countries, but it would be surprising if there were not going to be pressure from the U.S. to have a significant amount of the 1.8 million barrels a day taken off the market brought back in. And the 1.8 million barrels a day that producers have taken off the market is a significantly larger amount than whatever we can project would be a reduction in Iranian exports. So, it's a wait-and-see attitude at the moment, and we need to see what the OPEC Plus countries are going to do with respect to their current production cut agreement.
Okay. Well, actually, U.S. has already gotten to the crosshairs of the EU because of the imposition of duties on steel and aluminum. Do you think the entire world will fall in line with the U.S. demand for sanctions? And if they don't, can there be some countries which will buy Iranian oil, and therefore the arithmetic of the pricing could be different?
The arithmetic is really difficult to calculate at the moment. We know that Iran has been toying with pricing oil exports in currencies other than the U.S. dollar.
Yes.
They certainly have with respect to the euro, but it looks as though they've been selling oil into China and hedging it on the new INE exchange in Shanghai, and they've been doing this in renminbi. So this is certainly an opening for clearing of oil, at least with China, on a petro-yuan basis rather than a petrodollar basis. Okay. So I think it remains to be seen what the outs are, but certainly the U.S. does not have the wherewithal to prevent other countries from importing crude from Iran or making payments in currencies other than the U.S. dollar, and there will be certainly leakage. It's a much more difficult thing at the moment for the U.S. to induce other countries to reduce their imports from Iran than was the case in 2012.
So what are we looking at in terms of a price range? Are we already at the highs because the worst has gotten priced in, or do you think?
I don't think so. I mean, it really depends on what the OPEC countries do in terms of their their production cut. I mean, from our perspective, as we measure inventories in the world, partly because of the very cold winter that the Northern Hemisphere went through this past winter, which raised oil demand significantly higher than had been expected, and partly because some OPEC countries, a number of OPEC countries, are seeing their production falling relatively quickly. Those include, Angola and Venezuela, and potentially Nigeria and Libya. The market has gotten very tight, and if we look at it in terms of measurable.
Do you get a sense that it will continue to stay above $75 a barrel? I mean, is that a foregone?
We're moving into a season of higher refinery demand for crude oil, and that should, under these circumstances, in our judgment, push average prices up to the high $70 level in terms of Brent, which means oil pricing at times in the third and fourth quarter of this year above 80, unless the OPEC agreement. Unless the OPEC plus countries decide to put more oil in the market. Eventually, the high prices are stimulating a significant amount of new oil production. We at Citi expect that the U.S., Canada, and Brazil combined look like they now will be adding from the beginning to the end of the year as much as 2.5 million barrels a day to the market, which is a significant amount. It's above the level of demand growth. And we should see the decline in global inventory that has been in the market for the past 15 months or so, changing into no inventory change and eventually an inventory build. So, even if OPEC doesn't bring more oil into the market, the stimulation of new production will, by a year from now, result in an inventory build with the result, we don't know what the result will be of OPEC plus bringing more oil in the market, but that will help to balance the market in a better way.
Sure. Mr. Morse, thank you very much for joining us with that detailed analysis of how things may pan out for the next 1 year. So at the moment, high 70s, and third and fourth quarter don't rule out over 80s as well for crude price. We take a break. We're coming back with the micros now. TV18's top 10 list of stocks.
A big story, of course, is what's happening with crude. It is now almost at $77 a barrel. Let's see how our markets react to that. For now, most Asian markets are actually trading in the red. The SGX Nifty also has a minor red cut going. But our research team is here to give you the list of top 10 stocks to watch as we head into trade this morning. Anuj, what are you looking at?
So, Sonia, again, the larger macro trade today would be to, play this IT versus banks theme. But for today, there are a couple of stocks which are looking interesting. One is Group Finance. Huge delivery buying yesterday. It's the best performing NBFC stock, up 41% this year. We normally don't talk about it because it's not in F&O, but it's been really a very strong stock. One stock on the red side, which is Concor, because there was big slip in last hour after a big rally, and there is some sign of smart money booking out of that stock towards the end. So that one could see some profit taking, some more profit taking today.
Concor. Okay, well, mine is an easy list. The crude impact is definitely going to be initially negative for BPCL, HPCL, IOC, probably minor, of course, even for the airline stocks, and of course, positive for ONGC, Dolphin, and those, and which one? Aban. One should at least start with that kind of trend.
Okay, but the big stock that moved yesterday was Jubilant FoodWorks. Of course, we all know those stellar same-store sales growth numbers. But Mangalam is here to tell us more about what came out of the conference call. Mangalam, how optimistic was the management and what are brokerages saying?
Well, the management was fairly optimistic in the earnings call, Sonia. They have begun to increase the pace of new store opening. This year, remember, was consolidation. They opened just 70 new Domino's stores. They are earmarking about 150 crores for 75 new stores in FY19, so that is a positive. They also said they'll be focusing on getting higher sales from the existing stores, so positive sentiment for the SSSG going forward as well. And they reiterated that they will break even on Dunkin' Donuts by the end of FY19. They reduced the losses in this year as promised too. So the brokerages have taken heart to that. Most of the brokerages, CLSA, Morgan Stanley, as well as Credit Suisse and Kotak, all of them have increased their target prices. and the consensus target price is anywhere between 3,000 to 3,150. However, the stock is at a record high, cooled off after a stellar set of numbers yesterday as well, so it will be interesting to see how it performs today. But as we do that, also listen into what the management had to say in the earnings call.
We had been very rigorous and selective about opening of new stores in the year FY18. With steady growth in volume and sales, we are starting to increase our pace of opening new stores. We will also continue to make good efforts and focus on getting higher sales from existing stores. I also promised to reduce losses in Dunkin'. We did shut down our unprofitable stores and rationalize the cost. Our sales have continued to improve, resulting in reduction of our losses to half in FY18. We are working hard on the path of achieving break-even by the last quarter of FY19.
Okay, so that's some optimistic commentary coming in from Jubilant FoodWorks and some really aggressive target prices on the stock. But let's move on and talk about some capital goods numbers now. Anisha's here to diagnose, or rather tell us what ABB's numbers look like. Anisha, how was it this quarter?
Well, the numbers are broadly in line, Sonia, but I'm giving it a red after the reaction that we saw to Siemens' number, and the seat really did not take the disappointment really well. Now, as far as ABB is concerned, it is much better than Siemens. The order inflow is up around 10% in year on year, though the expectation was of a 20% growth. However, the management commentary is still positive. They talk about the large orders coming in from a diverse of industries, so that is a bit of positive. Other than that, the revenue growth was around 10% versus an expected 13%. That has been largely driven by the HVDC order that the company is executing. The profit is in line with expectations, though the margin is a tad bit lower at around 7.4% versus 8.2% that was expected. But overall, largely an inline set of numbers, maybe a tad bit of red.
Okay. Well, what is it for Hindalco in that case, Nigel, with the Novelis numbers?
Novelis numbers were very, very good. It's one of the best quarterly performances that I've seen in terms of an EBITDA number. You know, the top line was more or less flattish at around 800,000 odd, but the EBITDA, the absolute EBITDA number did come in very, very strong at around $319 million. So that was good. The street was working with a number of around $315 million. Even on a per ton basis, they clocked around $395 on a per ton basis. The street was working with a number of around 380 to around $385 on a per ton basis. How do they come up with this good performance? They're using more amount of scrap. Remember, LME prices have been moving up. Scrap prices haven't been moving up that much. So the spreads is what they're gaining on. And increased sales to the auto segment, that's what's helping them. In the last year, they've reduced their debt. Now it's down to around $3.5 billion. So that's fairly good. And the net debt to EBITDA, that as well has come down to around 3.5. I remember it being at around 4.5 to around 5. So positive on Hindalco, and the brokerages as well, they believe so.
Okay, that's good news to hear. Thank you very much, Nigel. Anisha, Whirlpool numbers?
Well, again, a broadly inline set of numbers. The top line growth was rather strong at 1257 crores versus expectation of around 1200 odd crores. Profit came in line with expectations at 91 crores, but it was also supported by other income, which was higher. A bit of disappointment coming on the margin front. It seems like the product mix of the company has skewed a bit, and that's the reason the margin has come down to 11.1% versus an expected expansion. So overall, looks like inline set of numbers here as well. Maybe a bit of green tick for this one.
Oh. Okay, inline set of numbers. They have a new CFO as well. Let's see how that goes. But Mangalam, what about Blue Dart?
A pedestrian set of numbers for Blue Dart, Sonia. The revenues grew by just about 6%, EBITDA grew 3.5%, margins sub that 8% mark, and the net profit, that one grew because the company paid out less finance costs. And remember, they have no debt. The finance cost that they pay out is the bonus debentures that they had given to their shareholders as well. So net profit growth of 39% has come in on the back of that. Lower revenue growth and lower EBITDA growth is something that the street won't like. I remember when I joined CNBC TV18, the stock price was double what it is right now, as was the revenue growth numbers. Now they have halved from in the last 3 years.
Oh, they're going to rue you joining CNBC TV18, won't they, Mangalam? All right. Anisha, Sadbhav Infrastructure?
Well, yes, good set of numbers coming for Sadbhav Infrastructure. The revenue has actually doubled, but more importantly, the company continues to report losses. Now, it has narrowed down a bit, and it would have further narrowed if the company would have not taken a reversal in the other income. So that is what the positive is. The operating margins are also healthy at around 37%. Other than that, you look at the taxes, which are higher a bit. So overall, if the other income and the taxes would have been better, the company would have reported a better bottom line. The cash profit still remains healthy.
Okay, thanks a lot for that. Well, Tata Steel, why are you watching that one today, Nigel?
Well, Tata Steel, they've said that they're looking at selling some non-core assets in Europe. You know, they're talking about some aluminium facility that they have in Germany, another small unit that they have in Istanbul. So it's a step in the right direction that they're looking at selling these non-core assets. We can't really put a value to this number, but step in the right direction. Important to note, how exactly do they settle the employees? That's something that the street will be looking forward to. But the book value of all these assets together roughly is around 1,000 crores odd. So step in the right direction. Steel prices are strong. Stock should open up in the green.
Okay, and it's also 1,100 employees. So there you are in terms of the cost that it will mean to wind up these assets. Well, Sonal, you have other stocks list on your radar.
I'll start with the earnings, and Syntex Industries is on top of my list. Good set of numbers. The EBITDA came in higher by 20%, and even the operating profit margins, they improved by 330 basis points. Expect that stock to be in green. But dull set of numbers reported by Spark. The revenue went down by 52%. They reported a profit of 2.5 crores versus a loss last year, but that was because of an exceptional income. Expect that stock to be in red today. A lot of people are checking in into malls. That's why Phoenix Mills, they saw consumption growth of around 9% YOY. Rental income also grew by 13%, and they saw an expansion in their EBITDA margins by 600 basis points. Expect a green on that stock as well. Mahindra Holidays, though this was a weak quarter in terms of seasonality, the operating profit margins went up by 170 basis points. Even they reported a profit growth of around 21%, so expect that stock to be in green as well. Tata Com is another stock that will be in focus because Tata Sons chairman N. Chandra met the DOT secretary, and they said that it is looking to acquire enterprise business of Tata Teleservices. Now, government holds around 26% stake in the company, and Tata Sons is seeking approval for the acquisition. Now, why it is important for the company is because Tata Tele enterprise business is seen complementary to Tata Com, and that's why I expect the stock to be in green today.
Okay, so that's a whole host of stocks to watch. Thanks, guys. Here's a quick recap now of our top stocks. Expected to gain today: ONGC, Aban Offshore, Dolphin Offshore, Group Finance, Jubilant Foods, Hindalco, Whirlpool, Sadbhav Infra, Tata Steel, Syntex Industries, Phoenix Mills, Mahindra Holidays, and Tata Com.
Okay, and stocks expected to be under pressure could be IOC, BP, HP, Asian Paints. Okay, I'm not so sure the paint companies are responding just yet, but yes, airline companies definitely. Jet Airways, Interglobe, SpiceJet, Concor, ABB, Blue Dart, and Spark also likely to be under pressure.
Okay, let's take a quick break on that note. But on the other side, after the consolidation yesterday, what do you do today? Our technical experts Ashwini Gujral